Hi, I'm Bill Walker. Europe has been a bit of a riddle for investors. Here to solve that riddle today is Michael Hatcher, Head of Global Equities and Director of Research for Trimark Investments. Thanks for being here. Now, Michael, in addition to managing the Trimark Fund, I know you also run Trimark Europlus Fund. It seems really like no one wants to own Europe right now, but yet you earned unit holders north of 20% in 2012. That's quite an achievement given the environment over there. How did you do that?
You can never really determine what the 1 year market is going to give to you. So last year was a good year for the market overall. Having said that, the Europlus significantly outperformed the market. And if you look at a longer period of time, many people wouldn't have thought in 2010, 2011, 2012 that Europe would have been a good place to invest. The Europlus fund has returned a CAGR over those 3 years, or a return of over 8%, in what I would argue I think we'd all agree, turbulent times within Europe. And the key to that is the underlying holdings of the portfolio. It's owning quality companies with quality cash flows that can withstand whatever environment is being thrown at them. If you looked at the Europlus, the other perception is that it's Europe-centric or it's Europe-focused. In reality, we own many very high-quality global franchises that happen to have their headquarters in Europe. And these are businesses that many of them are household names or products or companies that you would actually recognize. And as they're global, one statistic I can throw out is about 30 to 35% of the revenue that come from the companies that I own in Europlus come from the emerging markets. So this isn't sort of a startup emerging market company that's trying to sell a new product in a fast-growing industry. These are well-established global brands, whether you're talking about the leading spirits manufacturer of Diageo owning Johnnie Walker, whether you're talking about Adidas selling their football cleats or their soccer cleats into Africa, whether you're talking about Heineken selling beer in Nigeria or selling beer in Mexico. These are all sort of leading high return on capital businesses that have great global franchises. But the reason that it's Europe, they're simply headquartered there. So I think you're really left with a high quality global portfolio of cash flows that are within an area that the headline news, that's the opportunity. As people are more skeptical about an area, that's going to put things on sale, and that gives you opportunities to actually make even better investments.
And let's go back to the Trimark Fund. Can you give us 2 or 3 compelling reasons why investors should buy Trimark Fund for a portion of their allocation to global equities?
Well, it's an interesting sort of nuance of the question. I think an allocation to global is very important. You have access to some of the absolutely best companies and best franchises in the world. And what you'll have with the Trimark Fund is you will own a relatively concentrated group of companies that have very solid cash flow generating abilities for long periods of time. I would make the argument that if all of these companies sort of went private, in the sense let's forget the public markets, and let's say the stock markets didn't exist. If you owned a piece of these companies for the next 5 to 10 years, I would think that and I believe that you would do sort of very well, and you wouldn't actually have the volatility of seeing the stock market going up and down every day. What you would see is the underlying cash flows and the earnings that these companies generate would sort of nicely grow over time.
Thank you so much.
Great, thank you.